We are recording.
Okay. Okay. Hi, everyone. It is time for our third webinar in the series of implementation webinars that we've been providing for the two balance of state CoCs. This is Barbara Hodis, and with me is Lee Howard. And we are looking forward to going through a whole other set of topics. The topics for this webinar are ones that, except I can't move my... There we go, I can move my slides. Okay. The topics for this webinar are ones that are based on questions that we've received from PA-CoC, so many of you may see things that you have asked us. We asked for webinar feedback on the surveys, and we asked for questions there. Some things weren't answered on the previous webinars that we had. We also include a couple other topics, implementation topics that sort of don't get talked about much, but they're ones that we realize that maybe have slipped through the cracks for some of you. Many of you, I'm sure, are up on the details, but for some of you, these are ones that may have been ones that you've missed. We originally thought we were going to do this in a Q&A format, but the reality is since you can't ask us questions and we can't answer them, we put it together more as a taking your questions and turning it into a presentation. So the topics that we've included are eligible program costs, what's eligible under each category, and then specifically what's eligible under leasing and rental assistance, because they are always, it's just confusing. When we first started back prior to HARF, leasing and rental assistance didn't have the distinction that it has now. We kind of had them mushed together as one activity, us and the rest of the country. When HUD split them apart in HARF, all of a sudden it became a lot clearer and also a lot more confusing. So we did our best to pull apart leasing and rental assistance so you can see the distinctions between them. Talk about match and leveraging, another one of those topics that everyone talks about a lot and doesn't particularly enjoy. And then we'll have just very brief information on APR deadlines, fiscal management, and participation by homeless individuals. Oh, there we go. All right, so we're going to begin with eligible program costs under CoC programs. Okay, there are two different sets of costs. One are ones that are only associated with new projects. That's costs associated with acquisition, costs associated with rehabilitation and construction. We're not going to talk about those because basically they're history. Anybody who has a site-based program has already done the acquisition and rehab and did whatever was eligible. And going forward, we haven't had a new rehab or construction project in a number of years, largely because we haven't had as much money available as we had in previous years for new projects. And so we just haven't been doing, site-based programs have not really been part of what's been happening in the regional CoCs. So we're going to look at the eligible costs that are under both new and renewal projects. They would be operating costs, supportive services costs, project administration, and then leasing and rental assistance. So let's first look at operating costs. These are CoC funds may be used to pay the cost of the day-to-day operation of transitional permanent housing in a single structure individual housing units. That means operating costs are the costs associated with running a building, operating real estate. And it's frequently, I know in other funding, whenever you do other grants, the operating budget may be the cost of operating your agency's costs. Operating budget like your telephones and your organizational operating costs. Under the CoC, operating costs are real estate costs. So if any of you have experience with housing development, you do what's called a operating pro forma, and there are costs in it that are the operating costs of real estate. That's what this is. So if you look at the costs, they are the costs of running a building, maintenance, repair of housing, property taxes or insurance, scheduled payments to a reserve for replacement of major systems of the housing, provided that the payments must be based on the useful life of the system and expected replacement costs. That is one that I don't know how many of you have that in your budget, but pay attention to it, because if it is in your budget and you're not using it, that may be a place you may want to shift money, or you want to make sure that those replacement reserves are actually put into a reserve fund. It's there for a reserve for the replacement of a roof, the replacement of a furnace, something like that. That would be a major cost to pay for out of a single year's budget. But if you put a certain amount of money away each year, like, a certain, like, $1,000 a year away for these, then there's money when that roof goes. That's what this line item is for. So if you have it and you haven't been spending it, think about either putting that money where you need it or making sure you make those reserve payments, because you'll benefit down the line. Other things are building security for structure where more than 50% of the units or areas paid for with the grant. That's often the case when there's units in a building that has many kinds of units, but we also have some site-based transitional housing that shares space with the emergency shelter. So in that case, if the program is at least is more than 50% of the units or area of that building, then the security costs would be eligible. Electricity, gas, and water, furniture, and equipment. So these are the costs of having real estate, not having an agency. Okay. So now we move to supportive services. These are the costs of basically helping the people in your program. So operating is the cost of helping your building do well. Supportive services money is the money used to help the people in your program. So grant funds may be used to pay for the eligible costs of supportive services that address the special needs of the program participants. And in particular, the services that they're provided under this, and this is more of a hearth emphasis, should be focused on assisting program participants to obtain and retain permanent housing. That actually goes back to original applications. Those of you who applied in 1997 and earlier, there was also a paragraph about how you were going to do that. That emphasis has increased under hearth, but it's always been a part of the program. And there's a long laundry list of supportive services. I can't imagine having one that is not on this list. Annual assessment of service needs, assistance with moving costs, case management, child care. Let me just stop at case management for a second. I'll back up to that one. Since this list was put together, a lot of continuums of care, including ours are in the process of doing this, have established coordinated entry systems. And part of the coordinated entry is completing the assessment tool, making referrals, helping with housing plans. The case management costs of doing those sorts of things are eligible supportive services costs. And going back down the list, child care, education, services, employment assistance and job training, food, housing search and counseling, that is an important one. That has also become the new emphasis under continuum of care. So the two budget items that are probably on most of your budgets are case management, and then if not housing search and counseling, that may be handled through case management for many of your programs. Legal services, life skills, mental health services, outpatient, outreach, substance abuse, transportation, utility deposits, and direct provision of services. In recent years, again, with budgets being slimmer, most of the program budgets have just had case management, maybe housing search, maybe some outreach. Very few grants, if any, in our continuums of care have money in them for mental health services or substance abuse treatment services, because these are services that are provided through mainstream resources. Transportation may be in a lot of your budgets. If you find that your line, you can shift among these various categories if you would like to make it work better for your program. You just have to work that out with your HUD rep. It's not any kind of a major change. It's more of a change within your own contract. It's not something that requires any change to your application per se. So if you find that your money is not in the right places, this is something to work out with your HUD rep and have the money lined up the way you want it to be, just so long as your total cost doesn't change. So now we go to project admin. This covers project administrative funding covers costs related to the planning and execution of continuum of care activities. And in my mind, it's the cost of doing business with HUD. Operations is the cost of running your building. Services is the cost of helping people. Project admin is the cost of doing business with HUD. Basically, you do all these things so that your HUD grant will work properly. It's not going to benefit your agency any. It's going to basically be to make sure your grant is in compliance and you're meeting all of HUD's requirements. So there's some general management, oversight, and coordination costs that are eligible, and they'd include salary, wages, and related costs of staff to do the following activities: Preparing program budgets and schedules, amendment to those budgets and schedules. So for those of you who have fiscal offices who work on the budgets for you, this is where they would get paid. If you are a project manager and aren't really on the budget of a project, but you're the one who makes sure that the schedules are in place, this would be your responsibility, and it would be paid for out of the admin line. Developing systems for assuring compliance with program requirements. That means making sure that the APR is submitted on time, making sure that your contracting happens on schedule. For new projects, HUD has a list of sort of time frames that need to be met to be in compliance with the HARTH Act. That would be the type of thing that would need to be scheduled by through using admin funds if need be. Developing agreements with subrecipients and contractors. If you are a subrecipient in your program, the cost of developing those contracts would come under admin. Monitoring program activities for progress and compliance with program requirements. Again, looking at your program to see if you are meeting the requirements of the program and then making sure that your program is actually meeting the needs of the people in it. Preparing reports and other documents directly related to the program for submission to HUD. That would be preparing your APR and things of that sort. Coordinating the resolution of audit and monitoring findings. If HUD does come out and visit you and you have an audit finding, the cost of fixing that can be paid for out of project admin. Evaluating program results against stated objectives. And as HUD is getting more and more performance-oriented and the COCs are looking more performance, the looking at your own organizations and projects performance could be covered under the admin costs. Managing or supervising persons whose primary responsibilities are all of the above. So that would mean if there's a supervisor who doesn't do this but is checking in on it, their costs would be covered under admin. There are travel costs, travel costs incurred for monitoring of subrecipients, administrative services performed under third-party contracts or agreements, including general legal services, accounting services, and audit services, so to pay for your audit. And then other costs of goods and services required for the administration of the program, including rental or purchase of equipment, insurance, utilities, or office supplies and rental maintenance, but not purchase of office space. Basically, what we have seen in a number of programs is that admin does not get fully used. It's just sort of because it's seen as so complicated that it doesn't get used. I think it's a lot clearer under HARTH than it was prior to this. This is a pretty inclusive list of what you can use your money for. It should not be set up as 1/12 a month. It should really be set up to be billed against these activities using timesheets and actual time spent on these activities. But it should be spent rather than just turned back, unless you don't need that amount of admin. But just I think all of the compliance work itself probably would take up the time, like doing the APR. Okay, sorry I didn't move the slides. Okay, moving from admin to leasing and rental assistance. Okay, back in the day, we had no idea that there were two different kinds of things called leasing and rental assistance. They kind of seemed interchangeable under the old McKinney programs, the SHP programs, and the Shelter Plus Care programs. But under HARTH, they were split apart and made very, very explicit. And a lot of you sort of have been doing a lot of work bringing your programs into compliance with either leasing or rental assistance. But let's just look at each of them. For those of you who are somewhat new to it, there have been a lot of staff changes in programs. So make sure everyone understands how their program operates and whether it is in fact operating according to the right model. So leasing is the leasing of property or portions of property not owned by the grant recipient or project sponsor for use in providing transitional or permanent supportive housing or providing supportive services. So it is leasing of property. You lease individual units or lease an entire building. And the other part is you cannot lease from yourself or any other entity that is related to your agency. This was a problem years ago when an agency would have a tax credit project and want to use leasing in that building. Couldn't do it. Rental assistance is something different. Rental assistance is the provision of rental assistance to eligible persons for transitional or permanent housing. That means it looks more like a Section 8 certificate. The rent, it covers a portion of the rent, and the location of that housing is up to the individual, and we'll talk about the different ways rental assistance is applied, but it's an assistance to a person, whereas leasing is leasing of property. Okay, so let's look at leasing. buildings or units are leased by the grant recipient and subleased to program participants through what's called an occupancy agreement. Because it's under transitional housing, the agreement must be for a term of at least 1 month and automatically renewable up to 24 months. However, we recognize that most transitional housing programs anymore are not going up to 24 months, but if so, it can go up to 24 months. But it's a renewable agreement between the grantee and the people in the program. Under permanent housing, the agreement must be for at least the term of a year and automatically renewable upon expiration. We've been asked a lot for, can you show us examples of these? HUD has put some on their website. The link is on the slide, of leases and occupancy agreements. Okay, one of the reasons why folks like leasing is that there is no match requirement for the leasing portion of the budget. Among the other reasons that people like leasing is because it kind of, and I don't have these on the slides, it kind of gives more control to the grantee, which some like, some don't like. But basically, if you hold the lease, you then have more of a sense of the person is living in a program that you are operating. What is often not liked about leasing is the lease is in the agency's name. Therefore, the landlord comes to the agency and says, uh-oh, you know, this, that, or the other has happened. You're on the lease. You got to do something about it. So it kind of cuts both ways. But at least at this point, you're kind of, if you're an existing grant, you're pretty well locked into leasing or rental assistance, whichever it is. If you feel that your program needs to operate in a different way, I don't think there's a room anymore to change it, but we can talk about it. Okay, so okay, now the next thing is occupancy charges. Remember, we're not, it's not rent, but you don't have to charge occupancy charges, but you can charge them. And in transitional housing, historically, projects have gone about it in many different ways because they use the time in transitional housing as a time for people to put away some money towards when they move out. So sometimes transitional housing programs don't have any occupant charges at all. And sometimes they have minimal ones, or they set them up so that they're put in an escrow account, so a portion of it's put in escrow so people have money when they move out to move into their next unit. If there are occupancy, but most do have occupancy charges. If there are occupancy charges, they may not exceed one of the following 3 standards. 30% of the family's, I should say monthly, adjusted income. And there are adjustment factors that include allowances and deductions for disabled household members, medical expenses, child care expenses, and things of that sort. Or 10% of the family's gross monthly income. And the third one is in there, but I don't think it's relevant in Pennsylvania, and that is a portion of welfare payments specifically designated by the Public Welfare Agency to meet the family's housing costs. I believe in Pennsylvania that welfare does not have a designated amount that goes towards housing, so it would be the one or the other. And what I've seen is most people use the 30% rule. Most housing authorities do have good worksheets for calculating this. If you want to check with your county's Section 8 office, they would be able to assist you with a worksheet for it if you don't already have one. Okay, you cannot charge any other program fees besides the occupancy charges. Actually, our office worked with a program in another CoC that was actually charging fees for meals because it was a site-based program. The people all had disabilities, and so they were providing meals and charging. They also were doing laundry service and charging. You can't do that. You can't charge for meals, laundry service, child care, anything like that. There are no additional program fees that can be charged. The occupancy charges collected are considered to be program income. So if you do take 30, let's say you're using the 30% of income rule. So the tenants pay you 30% of their income. Now you've got this money. We used to think that that money could be used for match or leveraging. We've since learned it cannot. So the program income can be used for any other CoC program eligible expense, even if it's not in your grant agreement. So if you need extra costs to cover something else in your program, you can use that program income towards those sorts of things. But it's not your match or leveraging. But it can be part of, you can use it to put back into your program to provide other types of services that you think you may need, or if you have a budget shortfall someplace, you can help help it to meet your budget shortfall. From talking to grantees, there's very little money collected through these occupancy charges, but it could be some extra money that could help out your program. So the next one I regard as one of the more complicated parts of leasing, and that's the rent limits. So leasing and rental systems are quite different here. So under leasing, you can go up to 100% of fair market rent, so as long as the rents are determined to be reasonable when compared with similar units in the community. So fair market rents are published by HUD annually. And when you originally applied for your leasing funds, you applied for 100% of the fair market rents. As your projects have renewed, you have not been able to apply for that amount anymore. So the amount of your grant compared to fair market rent is not what it used to be. In addition, the rents that you can use in leasing have to be they have to be reasonable when compared to similar units in the community. The rent paid through the grant funds can't exceed fair market rent. However, you can pay for the amount of money, the cost that exceeds fair market rent with non-CoC funds. So maybe if you do have some program income, you could use it to cover the rental costs beyond fair market rent. So in some communities where the fair market rents are really not high enough to find an adequate unit, you can still rent it, but you can't use the grant money to exceed fair market rent. The tenant could pay. I'm not going to go there. Anyway, you cannot exceed the fair market rent with the grant money. Utilities are the other confusing thing. If the rent includes utilities, leasing funds may be used to pay the entire rent up to fair market rent. And I know most programs look for units that include utilities, largely to save money and largely because it's just a lot easier. But if utilities are not included, and so that means, and participants are expected to pay utilities, which means utilities have got to be paid by somebody. You can factor in the utility allowance in the occupancy charge, and then that will allow people to have extra money to cover their utilities. So instead of paying it to you in an occupancy charge, they'll have the money to pay the rent, to pay the utilities. Ideally, and it's often hard, it makes sense to find units that include utilities and don't exceed fair market rents. Okay, so what are the other eligible leasing costs? Up to 3 months rent at move-in. This would be security deposit, first month's rent, last month's rent. You can use leasing funds to pay rent on vacant units until a new program participant moves in, and that's because you as an agency have entered into a 1-year lease. So what are you going to do? You have a lease, person has moved out or has been removed from the program, or for some reason you now have a vacant unit that you're paying rent on and you're under lease. Unless the landlord will let you out of that lease, you have to fulfill the terms of the use. You can use leasing funds to pay rent on vacant units. It's not a great use of resources, but if you have to, you have to. Ideally, you get that unit filled as quickly as possible or work with the landlord around letting you out of that lease. But if it's a good unit and you want to keep it sort of in your inventory, it makes sense to pay that rent, keep your landlord happy, and get it refilled with another family quickly. Leasing funds cannot be used for property damage. That is another problem that agencies have encountered. A family will move in, the unit can have significant damage. Maybe I heard one example where a family had a large number of children. The children did a significant amount of damage on the property, and the leasing funds could not be used to cover that property damage, and the security deposit wasn't even close to covering the cost. So that's a problem that some nonprofits have encountered. Okay, change gears, looking at rental assistance. Rental assistance provides funding to pay part of the rent for a unit in which a homeless person reside. There is a lease between the landlord and the program participant. And rental assistance this wasn't the right place to put this, but I had no other place to put it. Rental assistance is included in the 25% match requirement. Going back to the first slide, the rental assistance provides funding to pay part of the rent. When you apply to HUD for funding, you apply for 100% of the rent. but in reality, you probably will not be using 100% of the rent because, as we'll show you later on, tenants do pay a portion of it. So we'll just see how that works shortly. But in this case, the lease is between the landlord and the program participant. The agency is not on the lease. And rental assistance has 3 different types. This isn't something new under HARTH. There's short-term rental assistance that's up to 3 months, and so that you often see that in a rapid rehousing program. And it can be medium-term, 4 to 24 months, and then long-term, which would be up to more than 24 months, which would be permanent supportive housing. Anything under 24 months would be transitional or rapid rehousing. And then there are 3 types of rental assistance. There is tenant-based rental assistance, which is what we are typically used to, and it is basically like a Section 8 certificate. The household has tenant-based rental assistance is basically the tenant finds a unit, or the case manager helps them find a unit, or if your agency is fortunate to have a housing locator staff person or function, help them find a unit that meets the program requirements, and they can move into that unit, and then their name is on the lease, and they receive tenant-based rental assistance. The other form is sponsor, and tenant-based rental assistance is the only type of rental assistance that may be used for rapid rehousing. Permanent supportive housing can also be sponsor-based or project-based, but rapid rehousing can only be tenant-based. Sponsor-based rental assistance works in that the grant recipient contracts with a project sponsor, which would often be a service provider, or if the grant recipient is the county and they have, let's say, a community action agency or a nonprofit who is their project sponsor, locate and lease housing, and then so they lease it as like we frequently refer to what looks like under some programs as a master lease. They lease a number of units and then sublease them to program participants. If the person moves out, the sponsor can lease the unit to another household or support the participant in a different unit. They can just take that rental assistance and then enter into a lease with a different landlord. The funding stays with the sponsor. So the sponsor agency, the one who's running the program, is the one who enters into leases. Then there's project-based rental assistance, and that's where the grant recipient contracts with the building owner who agrees to lease the units to program participants. If the person moves out, the unit is rented to another eligible person. Excuse me. The rental assistance remains with the unit in this case. Excuse me. Our office, I think every time we have these webinars, our office is being worked on, so dust is flying all over the place. Okay. Unlike leasing, program participants and rental assistants are required to pay rent. If you remember under leasing, they could pay rent, and they're required to pay rent the highest of the following, whereas before it was no more than the following. So there's a nuanced difference between how much people can pay. But it's the same 3 rules, 30% of adjusted income or 10% of gross income. No program fees may be imposed on program participants other than their portion of the rent. So once again, no additional program fees. They just pay their rent. They're a tenant paying rent, and that is it. Okay, unit rents can exceed fair market rents, but they must not exceed rent reasonableness. This is a difference. So when you go back, look at the leasing slide and look at this one, or just look at the slide that's relevant to you. Unit rents can exceed fair market rents, but they cannot exceed rent reasonableness. Now, your grant is awarded based on fair market rent, but the amount that can be paid is based on rent reasonableness, even if it's higher than fair market rent. So that leaves you in a predicament. If some of the units in the project are leased beyond fair market rent, the grantee must carefully track the cost to ensure that there are sufficient funds to serve the contracted number of participants. Now, if the participants are paying some of the rent, you should be okay, but it really needs to be tracked if you're going over fair market rent, because the budget for the program is pegged at fair market rents on a rental assistance project. But again, this does meet the need in some communities where you just can't find the units at fair market rent. The program participant is responsible for their portion of the rent and makes their payment directly to the landlord. the grant recipient makes their portion of the payment directly to the landlord. The grant money does not go to the program participant at all. Okay, going to utilities, if the utilities are not billed into the rent, the participant is required to pay for the utilities. And if that's the case, a utility allowance is factored into the rent calculation determination. And this is something you can go to your housing authority, determine what the utility allowances are in your community to factor this in. Okay, there are other eligible costs under rental assistance, again, up to 3 months' rent, security deposits, first month's rent, last month's rent. In this case, property damage is up to 1 month's rent, which is not going to cover a huge damage, but it could cover a hole poked in a wall or a major plumbing breakdown. And then vacancy payment for up to 30 days if the unit is vacated prior to the end of the lease, only 30 days. Whereas on leasing, there was you could keep it up until the end of a lease. However, that's, you wouldn't want to, but you could. Here, 30 days, that's it. Okay, some considerations about rent reasonableness. We just added a few more slides that relate to both leasing and rental assistance. How do you know what's a reasonable rent? You look at location, unit quality, size, unit type, age of the unit. Then you compare amenities, housing services, maintenance, utilities that the owner must provide. You look at other units in the general community that are as similar to yours as possible to see what is a reasonable rent for your unit, for the unit you're looking at in that community. Okay. One of the things that comes up is how do we pay for the costs associated with administering rental assistance? And these would be costs of processing rental payments to the landlords, cutting those checks, examining participant income and family composition, providing housing information and assistance, inspecting the units for compliance with housing quality standards, and just, I don't know what HUD means by receiving new participants in the program, but I think you probably know what that means. It's probably the general sort of orienting a person to the program and getting them moved into their unit. The cost of conducting these activities is payable under the rental assistance or leasing line. But remember, if those get pulled out of those lines, that's that much less that's available for rent, for actual payment of rents and payments of leasing costs. But they are eligible expenses under those lines. That's where you pay for those. It's the cost of doing business. In the interim rule, it states that nonprofits cannot administer rental assistance. And that was a major nightmare when the interim rule came out and projects were switching to rental assistance, but they couldn't because if they were a nonprofit, they had to find a government agency to administer the rental assistance. This was temporarily fixed to allow nonprofits to administer rental assistance, and it's expected to be permanently fixed through pending legislation. It was basically a mistake. There was a mistake in the legislation that nonprofits could not administer rental assistance. It was caught too late. So they have this temporary fix that is now working its way through Congress. I think it went through the Senate and it's on its way to the House. Went through the House and it's on its way to the Senate. So it will hopefully come up for FY 12, 13, and 14. The temporary fix is in place. 15 we haven't heard anything about yet, but hopefully, but the 15 grants have not been awarded yet, and so we're still okay. But the expectation is that this will be fixed for everyone, and nonprofits will be able to administer rental assistance and therefore pay for those services that they provide, the above services that they provide using the leasing or rental assistance line, leasing the rental assistance line. Okay, another issue that both leasing and rental assistance need to deal with is environmental review. When HUD came out with this environmental review rules, everyone was in a frenzy about how complicated they are. They're not that complicated. Projects funded for leasing and rental assistance are required to conduct what's called a limited scope environmental review prior to expenditure of grant funds. Administrative funds project administration funds can be used to cover the cost of the environmental review, and the HUD is on the form is on the HUD Exchange website at that location. You cannot spend money on your grant until the environmental review is completed. So this must be done. Okay, we're going to stop there. Dave, are you there? Dave?
Yes, I am, Barb.
Okay. I forgot to say at the beginning, if you have questions, please type them in, but we can stop now. If anyone has questions or hand raises about eligible costs, why don't we do that right now? So, Dave, do you have anything on there yet?
Yeah, we got a couple questions.
All right, let's go for it. Now, I want you folks to know that Lee is now on deck as a question answerer or helper outer. Okay, go for it. What's the first one, Dave?
The first question came a while ago. It says, I have a permanent supportive housing mixed with low-income housing. My grant covers permanent supportive housing. The grant covers 50% of cost of the apartment building. Would building security cameras be covered if it is 50% and not more than 50% as stated on your operating costs that are eligible?
Okay. Okay. So the question is whether whether they can cover the security camera in full or not. That's what the question is?
Correct.
Is that what it sounds like to you?
Mm-hmm.
Okay. Building security for a structure where more than 50% of the units or area is paid for with the grant. That's what it says. I would suggest to whoever sent that in to send that into AAQ with like actual figures on the percent of the building that is permanent supportive housing within, I guess it's a tax credit building, I'm not sure, and whether, and give the actual facts and find out whether, one, whether you can cover all the security camera, or two, prorate it for the part that's prorated for the percentage of the building that's your permanent supportive housing. I hope I answered it. If not, come back with a second question.
Yeah, the interim rule, the regulation does not specify what would be included in that for building security.
Doesn't?
Does not.
Okay, this came from.
Yeah, it just says building security like you have.
Oh, okay, the exact same thing I have. Okay, alrighty. Okay, is there another one there, Dave?
Yep. The next question in the chat box is: are attending RAB meetings eligible as admin cost?
Wow, that is a good question. Attending, so in this case, for purposes of like HUD talk, we would say attending CoC meetings. I have not seen that explicit, but that's.
I'm going to look while we continue.
And or we'll find out.
Yeah.
Attending. That's a really good question.
Okay. And then I got two questions in the Q&A portion. It says, so it's tracking services related to match and leverage. They have there's an agency that's a job training program for elderly people, and it's based off of volunteers. They're not paid directly, but the company pays those volunteers $7.25 an hour. Do they charge the $7.25 an hour, or do they use the $10 an hour volunteer rate?
Oh wow. We'll get to that in a minute with match and leveraging, but I'm not sure we're going to have an answer for it because that's a really good question. I think at this. Let's talk about it again when we get to it. Lee's looking at me. We'll try to figure this out, but let's wait till we're at that part of the presentation, and we'll come back to it. That's a good question.
Okay. And then another question is, what is the minimum length of time a lease has to be for permanent supportive housing and or transitional housing?
Okay. So if it's rental assistance.
But did you say, oh yeah. It doesn't. It just says a lease. It doesn't say rental assistance or lease. Okay, sorry. Go ahead.
No.
Okay. So under the leasing program, I think we covered that.
It's on slide 16.
That so on slide 16 it says that if it's a leasing program, at least 1 month for permanent housing, at least a year. I am not. But if we're talking rental assistance would typically not be transitional housing, because transitional housing that uses rental assistance has pretty much been converted into rapid rehousing. So we're probably mostly talking about rapid rehousing and permanent supportive housing. And this is another one we're going to have to double check, but I remember that leases have to be for at least a year. Is that how you remember it, Lee?
Mm-hmm.
But how would that work under rapid rehousing?
Because the assumption is that...
Oh, then the person takes over the lease on their own funds. So under rapid rehousing, the lease would be for a year, even if the rental assistance ends in 5, 6, 7 months. The person stays there and pays for that lease on their own with their own money, and permanent supportive housing is permanent. We will double check where it says whether the lease has to be for a year, but that's how I remember it. It's an annual lease. But for leasing we've covered, but for rental assistance we'll find that out. Okay.
All right. Next question: are support services dollars able to cover property damage?
No.
No.
We know the answer to that one. No. Sorry. So property damage is an issue. It is definitely an issue.
And then we have one more in the Q&A. It says, excuse me, if a grant program is transferred to another entity to administer it, does the new agency need another environmental review before spending funds?
Oh,
boy, I'm not sure. The whole process of changing a grant from one grantee to another is a big process. So it requires, and I don't know if this is one that's already in the works or one that someone's contemplating. I would appreciate your letting, whoever that is, we would appreciate your letting us know which project is working on changing to a different entity. And I don't think there needs to be a different environmental review. Just, again, using logic, and I always say, like, I don't know why I try to use logic when dealing with this stuff, because the environmental review is about the impact of that activity on the environment. That's why we have this easy environmental review for rental projects, because we're not changing the environment at all by leasing or renting these units. We're putting people into units that already exist. An environmental review is much more complex when you're building a new building or rehabbing a building that may have an impact on the environment. You may mess up a floodplain or something like that. Or you may be doing a unit that's too close to an airport and be too noisy, and they may not accept that project. But for rental assistance and leasing, the units are there. You're not changing a darn thing. So I don't think it's I don't think that there would be any issue on the environmental review. But we do want to know if a project is changing grantee, because we need to know that for the application process. So please let us know on that.
Okay.
Is that it?
That is all the questions right now.
Wow, that's the most questions we've ever had. Thank you.
They're good questions.
Yeah, these are great questions, and you folks know what the issues are, because you have these decision points every day. We read the regulations and try to memorize them and make them real, but we don't see the daily stuff that you have to say, ugh, am I allowed to do this? So thank you. Okay, if more of those questions come up, feel free to type them in. We're going to move on to the match and leveraging part of the webinar. Okay, so what is match? Match is cash or in-kind resources contributed to a grant. Let's stop there for a second. I've had major battles with various CoCs, not our own, about can it be in-kind? It can. In the past, match was cash. Under Hearth, match is cash or in-kind. But that means you have to have enough money to meet all of your costs. So if you have an old grant that applied when the match was cash match, so you only got 75% of the money to pay your case manager and the other 25% was cash, and now you're saying you're going to meet your match requirement with in-kind, well, you can't really pay your case manager with in-kind. You got to pay them with dollars. So just think about how you meet your match needs, and the match is so. Also, when your budgets were originally set up, if they're old programs, they were set up at 80% for 80% of the cost of supportive services, 75% of the operations. Now you're setting it up as 25% across the board, everything: admin, case management, rental assistance, the whole works. So your budgets, your match has to come from somewhere. And unless you've scaled back what you're doing, you've got to meet all of your costs. So as much as you're now allowed cash or in kind, your budget, if it's a new program, you've structured it correctly and you can make it work. But if it's an old one, chances are you're still coming up with cash match because you don't have enough money to do the job that you originally signed up to do. Just wanted to sort of start with that. But cash match is actual cash dollars contributed to the program. In-kind match is the value of real property, goods, or services contributed to the program that would have been eligible costs under the CoC. So the in-kind match must be activities that are eligible under CoC. All match must be for activities that are eligible, even if those activities are not funded under the grant. So if you're doing a project that doesn't have legal fees in it, let's say, that's an eligible CoC cost. You can provide in-kind match of legal fees because it's an eligible activity. So just that, that's a difference from what we're accustomed to on this program. Okay, examples of eligible match are cash contributed to the program for eligible activities, such as, I'm not sure if this is cash. Oh, of eligible match. Okay, so for activities such as case management, life skills instruction, mental health services, and SOAR. Was that the right place to put SOAR, Lee? We added that this morning.
I don't know. I thought it was, but maybe it should be to the left.
Okay, we're not, forget that SOAR right there for now, because that's not really a cash contribution. That's not in the right place. Examples of ineligible match are program income, such as occupancy charges. We talked about that earlier. Or tax preparation services for program participants. That came to us close at the time of year. You can do that for people. That's a lovely activity to do for them. And when we talk about leveraging, you may want to think about that for leveraging. But it's not an eligible match activity because it's not a CoC eligible activity. So let's look at what is required, the required amount of match. And again, this, for those of you who go back a ways, this is a big change. All CoC grant funds, with the exception of leasing, must be matched by at least 25% with cash or in-kind resources. So you would add up operations, supportive services, and then you get a total grant of $58,850. The match is $14,712. That can be all in-kind, it can be all cash, it can be somewhere in between. But that is your match requirement. You don't have to show match beyond that amount. That is the amount you're obligated to show. And when you do your APR, you need to show the source of your match and what match came to bear on the program. You will need to report on it. Another example, let's look at scattered site project with leasing. So the leasing is $20,000, services $15,000, admin $2,450, total $37,450. But the match is only on $17,450, just the supportive services admin. So you can see the match on this one is only $4,000 because you don't have to match on the leasing. A lot of projects have chosen to stay leasing rather than rental systems for this purpose, but I would venture to say that most projects have enough in-kind match that the match on the rental assistance would not be a major problem. I could be wrong, but that's sort of knowing the number of services that people receive through your programs, that the match can be met through in-kind. And then, so what are the allowable sources of match? Grantees can use match funds from any source unless that source statutorily is prohibited from being used as match. You can use federal funds, but you can't use other CoC programs. You can't use one CoC program to match another CoC program. State, local, or private. Grantees may use any public or private source that is not statutory prohibited. I don't know what that, anyway, you can use the value of real property, equipment, or goods, or the value of services. Participant mainstream benefits are not considered match. Benefits are committed to the individual, not to the project. So again, this is a change in my understanding of the program. It can't be used for match because it's not the project is not benefiting from mainstream, from a person receiving TANF. That those benefits are committed directly to an individual, so they are not a source of match to the program. So what kind of documentation is needed for cash match? Written documentation on the source agency's letterhead. So it must be on real letterhead, signed and dated by an authorized representative. At a minimum, it needs to include the amount of cash to be provided, the specific date the cash will be available, grant name and fiscal year to which the cash match will be contributed. So when we did the FY 2015 applications, those projects went from 2016 to 2017. So you need to give whoever's providing the documentation for the match the dates of the grant that you are renewing. Time period during which the funding will be available, that's what you need there, and allowable activities to be funded by the cash match, like what they are planning on matching, whether they're giving you a services match or whatever it is that they're providing you a match for. The documentation, and this may change with the NOFA, but the documentation, as we know it now, must be dated no earlier than 60 days before the application due date, as established in the NOFA. So if we don't know the application due date until roughly 60 days before it's due. So as much as you want to go out and get your documentation now, it has to be dated within 60 days of the due date of the NOFA. And for those of you who are wondering what the due date of the NOFA is, we have no clue. We usually get, in the past, we got 90 days notice. The last couple of years, we've only gotten 60 days notice. We don't expect the NOFA to come out all that soon because first step is they haven't even announced the Tier 2 projects, and we can't even start they can't start an application process till we even know what we were funded for last year. So once we have the Tier 2 projects information, we'll then have better clues as to when the NOFA is. My guess is not until at least June, July for starting, but we will keep you posted. The documentation must be provided to HUD prior to execution of the grant agreement. If you remember, you do that step in ESNAP's 1C9, I think it's called, and that's when you provide that documentation. It used to be called a technical submission. It may be still, but it's the 1C9 in ESNAP's. Okay, now looking at documentation of in-kind goods and equipment. Okay. It must be, again, on the donating agency's own letterhead, signed and dated by an authorized representative. At the minimum, it must include the value of the donated goods, specific date the goods will be made available, allowable activities provided by the donation. The value of commitments of land, buildings, and equipment are one time only and cannot be claimed by more than one project or by the same project for another year. So let's say you have a site-based program, the land was donated to you, you took that match of in-kind in year one. You can't take it ever again. It was a one-time documentation. In-kind services, the grantee must enter into a formal MOU with the agency providing the in-kind service, establish a system to document the actual value of services provided during the grant, to sort of document time and cost of providing that service. Prior to the grant agreement, the grantee may use a letter from the partner agency to document the commitment. So in your application, you just need the letter. Upon award, you have to have an executed MOU in order to use that as a viable as documentation of your in-kind services match. The MOU does not have to be set up front, but you need to prepare, and the agency that you're working with needs to be aware that you will need to have an MOU. The MOU must be executed between the grantee and a third-party provider, include at a minimum the following. Agency information, the grantee identifying information and point of contact, service provider's identification. Unconditional commitment of the third-party provider to provide the service. This is not something that should be taken lightly. They're saying, we're going to do this. We're going to provide mental health services, and description of the services to be provided. The scope of the services to be provided by whom? Specific contract to be matched, length of time the service is provided, point in time, number of clients receiving it, total clients receiving services over the grant, qualifications of the person providing the services, and estimated value of the services provided. Documentation of the services match, documentation requirements and responsibilities of service provider and grantee are maintaining records of the actual hours of service to program participants. So you need a log of what services people in the program received, the actual hours. And then timeliness standards of service provider and grantees for providing service individuals, just sort of a standard of providing services, like what, with it, just sort of a quality assurance. Okay, that's match. So what in the world is leveraging? In the past, it was easier. Match was cash, leveraging wasn't. Now that matches can be cash or in kind, it just blurs it all the more. So leveraging is additional cash or in-kind resources committed to a CoC project. It includes all CoC eligible resources in excess of the required 25%. So that means in your application, you only need to show the 25% match. Excuse me. If you have 100% match, that other 75% is leveraging. You may have gotten emails from our office over the years saying, why don't you put some of this into leveraging and some of it into match so that your leveraging looks bigger. That's why you can do that, because you don't need to have any more than 25% match. And we'll go into this in a minute, but sometimes we really want you to have lots of leveraging. They can look the same. You just call them something different. Other resources, and then it also includes other resources that are used on costs that are not eligible in the CoC program. An example that was given to us is gift cards to program participants. Okay, this isn't an eligible CoC cost, but like the gift card they then use to buy their furniture, something like that can be leverage. There is no required amount of leveraging under the Hearth Act. Okay, under the Act, they encourage leveraging strongly. There's no required amount. However, the annual NOFA provides leveraging targets that impact the scoring of the CoC in the national competition. And at your local CoC level, there may be requirements or scoring based on leveraging. That's still, it's still being, the details of the ranking process have not been finalized, but often leveraging is part of what ranking includes. So here's what we know from the past two competitions. We don't know what 2016 will look like. 2013 and 2014 operated together as one set of scoring. We received 5 points out of 150, maximum 5 points. It could be 5, 4, 3, 2, 1. If 100% of the projects show committed leveraging in their applications, and the leveraging equals at least 150% of the overall CoC grant request. So during the 2013 application, that's when you got a lot of emails from us saying your leveraging is not enough, you need more, switch between match and leveraging. We want to hit that. We want to get, that's a lot of, 5 out of 150 points is a lot of points. Then lo and behold, I guess HUD found that cumbersome, I'm not sure. 2015, it changed, and it changed in a really strange way. It became only 1 point out of 200 for overall leveraging of 150%, and you had to show that you really had that leveraging. You couldn't, if you remember in 2013, 2014, all you had to say was you had it, and we told you to keep those letters in your files, not send them to us. In the past, we actually had you send them to us so we could look at them. We stopped doing that a few years ago, assuming that you've been doing this for a long time, and we didn't have the staff capacity or time to look at all of them. But in 2015, they said if you say you have leveraging, show us your letters. So in 2015, anyone who included leveraging in their application also attached their commitment letters. And a number of grantees did, and that was great. I don't know if we hit 150%, but we didn't push as hard for it as we did in 2013, 2014. But we will see what 2016 looks like. So this means do not let up on your leveraging. You do need it. You need it for your local competition. You need it to make your projects work. The question is the documentation and how hard we have to push for documentation. We will keep you posted on that. So what sources of leveraging have historically been used? We went through various applications, and we saw people use government sources such as behavioral health and intellectual disability, substance abuse, HAP, county human services. They use private leveraging from churches, medical centers, colleges, local homeless provider agencies, medical services, substance use services, and philanthropy. Okay, now we're getting to that volunteer question, and I'm not sure we have an answer. okay? The way it's written, and this has not changed in the over 20 years that I've been working on this program, so maybe it'll change this year. We don't know. But the value of professional services is at their usual rate. The value of volunteer services is at $10 an hour. So that's a really weird question that someone had, or a good question someone had, that they have volunteer services from an agency that pays their people, was it minimum wage or $7.25? Was it $7.25 an hour? I think the value of that service, Lee, what do you think? Do you think it's the $7.25 or the $10?
It depends if it's match or leveraging. I don't know if we have the answer to that.
It depends if it's match or leveraging? Do you want to answer? Okay, we will, how about we will look this one up, or Lee has looked it up but has not given it to me yet, so we will maybe provide it through an email. Is that what we're going to do?
I'll say it when we have the next Q&A.
Okay, Lee will get on in a minute. Okay, and then other potential sources are businesses, subsidized transportation, food pantry donations, furniture, or clothes from a local consignment shop. The documentation of leveraging, the documentation requirements for leveraging are not spelled out in the CoC interim rule. So we requested clarification from HUD, and their clarification was that's the same as match. So whatever the documentation was that we went through briefly before on match documentation, leveraging is the same. Again, this is something we expect to be clarified in the CoC final rule. It seems to be an omission of some sort, but by policy, the documentation needs to be the same as for match. Okay, we're going to stop here for questions, and Lee is going to respond. Are you going to respond to that issue? Or Lee's going to respond to.
I actually have a couple things I want to follow up on since we had our last little question time. The issue that Barbara was just referring to about the question that came in about $7.25 per hour versus $10 per hour, I think the answer is based on whether or not this is related to an in-kind service that's being provided through match, or if it's leveraging. If it is an in-kind service, and I know a little bit about this because I spoke to somebody yesterday at the Eastern CoC meeting, Lisa from United Christian Ministries, and if it is in-kind services, if you refer back to slide 45, the last bullet, what it says is estimated value of services provided, such as hourly rate. So if that is, if it's match, I would say to you, without a doubt, you would use the $7.25. If it is leveraging, I would say that you can either directly request some additional information from HUD via their Ask a Question function, or ask us to do that on your behalf, and we can do that. Because I think that the answer to that is on slide 51, which Barbara just went over, that indicated that volunteers are to be sort of prorated at $10 per hour. In this case, you know that they're paid less than that, so I think that would be a question that I would refer to HUD versus making an assumption one way or the other. Additionally, I wanted to follow up on the question that was submitted about the length of time the lease must be executed under rental assistance. So we already addressed that under leasing. Under rental assistance, it is 1 year.
Thanks. Okay, Dave, do we have other questions?
Oh, and
wait, Lee has something
I'm sorry,
else,
one other question that I looked up while we were in between was attending the CoC meeting, is that an eligible expense under admin? It is not clear anywhere in terms of the documentation or guidance from HUD, so I'm actually going to submit that after today's meeting, and I'm going to make the question more broad to include not only the CoC meeting, but also participation on the CoC subcommittees and things like that as well. Good. Okay, Dave, do we have any other questions?
Yes. First question is, can we use the occupancy charges we collect to cover repairs/damages to apartments?
Occupancy to cover repairs.
Yes.
Okay, Lee's got it. All right.
Okay. You had mentioned that occupancy charges are not eligible for match for leasing projects. This person has a permanent supportive housing and charge. We have a permanent supportive housing and charge room and board. Does this count as match?
Well, okay, it's permanent supportive housing, and you charge room and board because it sounds like it's a site-based program. We need to talk about that because room and board may not be eligible. What's eligible is 30% of income for site-based programs. So I don't think room and board is eligible. So whoever that is, could you contact us and hear so we can hear more about the project?
I have a feeling this question has a lot of nuances that may not make sense to discuss broadly, but I will say the other piece I just want to remind folks is that program participants are required to have a lease. So regardless of what kind of program you have to have an occupancy agreement or an actual legal lease in place for every household being served through the Continuum of Care funding.
And please do send us that email through PACOC so we can understand what the question is better and see if we can help determine what the answer is.
Just to go back to the original part of the question, though, the occupancy, again, is not part of match. It cannot be used as part of your 25% match commitment.
Okay, are there other questions, Dave?
One more, and then there's a follow-up to that. If our county counseling center sent an MOU for our program, then we have to document every time our tenant used those services and went to counseling. Is that correct?
That is correct. So you're going to have to show, because that is the value of either whether it's a service, whether it's a match or a leveraged service. You have to show that value actually happened and that it contributed to your project.
And I know that a lot of programs have struggled with this in the past, but I also know that in many cases folks have worked this out with the service provider, that there's some sort of annual printout or report that they provide to say, these 10 program participants received services between these two dates at, X number of hours per, client based on actual appointments that they attended, and it is provided in that way along with the dates, at whether it be quarterly or semi-annually or annually. If somebody is having a difficult time arranging for that information to be provided, if you want to also let us know that, whether it's in the via the email PACOC or in the follow-up survey, perhaps what we can do is have some type of peer sharing call at a later date with a provider that has successfully created this type of arrangement with their service provider in their community, and they can share the steps required, or perhaps even forms or spreadsheets that were created in order to track that. So just let us know.
Okay, Dave, do you have more there?
One more question. If an agency is also has a food pantry and a clothing room, can they use those services as leverage?
Yes, they can leverage their own stuff. Yes, go on.
Okay. And would they need to write an MOU between themselves for the food pantry?
This has come up before.
Yeah, it has, and I don't remember what the answer was. We'll have to look up if the agency is actually providing their own resources as leveraging, what the nature of the documentation needs to be. And I don't remember.
Okay.
Lee doesn't remember. My memory
No, when it was only a letter that was required, it was basically the program manager from one program to the next could write a memo or a letter to certify, or it could even come from the executive director indicating X program is going to provide, for example, transportation services to the participants in this other program. But for the purposes of an MOU, I'm not sure.
I think not. I mean, we should check into it, but just again, using logic, you would not write an MOU between yourself and yourself. It's with another agency, so it's more of a commitment letter that we're going to do this. But if it's between departments of your agency, like a food pantry is a different program. Let us try to research that one. We'll either. What we may do is try to, some of these questions, which I think come up a lot, maybe we'll put them into the next webinar as sort of here's a follow-up, or we'll get some sort of a fact sheet out.
Mm-hmm. Fact sheet, yeah.
These are excellent questions. Keep going. Are there some more there, Dave?
That's all the questions we have right now, but I am taking all these questions and putting them into a Word document I can send you.
Excellent. Oh,
Great.
thank you. Oh, that's excellent. Thank you very much. Okay, other topics. These are just going to be brief. APR deadlines. I get an email about once a month from a grantee saying, I don't know where to find my APR. I don't know when it's due. It's usually someone who's a new employee and has been basically told, oh, we can't get our money anymore, do the APR. So we just wanted just a quick slide on the APR. The annual performance report must be submitted on eSNAPs within 90 days of the end of your operating year. So that means it may not fall on the 30th or 31st of the month. You count up 90 days. That's when it has to be submitted. It is submitted on eSNAPs. And they change periodically how it comes up on eSNAPs. Sometimes you go and create your own. Sometimes it appears on your project list at the right time of year. There's a new guidebook, I gave the link to it, that tells you how it works now, but it does vary. I think now it comes up automatically. So if it doesn't come up automatically, you contact your rep. Or if it doesn't come up automatically, you go and into that where you would create your new renewal project on eSNAPs. You would go and see if you can create an APR. If there's no way to create one, then you know it comes up automatically. And if yours didn't, you notify your rep. So I would start looking for your APR the day your grant ends. Just go looking for it that way. You have 90 days to track it down and make sure you can get access to it. The data should be drawn from HMIS, not the backs of your envelopes or from pieces of paper around your office. They say explicitly in the instructions that it should come from HMIS. And that makes sense because actually when we are doing ranking, HMIS is going to be the source of a lot of the ranking information. So things that may be on your APR according to your grant period will instead be annualized for purposes of ranking. So we may look at percentage of people who move from transitional to permanent housing. And since you run on 1 year and someone else runs on another year, we may just take calendar year 2015. The actual years haven't been established. So the data in HMIS and your APRs need to sync with each other. You must always keep your APR, your HMIS data current because it's used for any number of things like reporting to HUD on AHAR. We use it in the continuum of care application that our office does to show the performance of the CoC. It's used in ranking of your project. And so we can create a sort of fake APR from HMIS for any time period that we need for ranking. So therefore, that data and the data you report to HUD have to be drawn from the same cells. The timeline may differ, so the actual numbers may not be identical, but the pieces of the pie must be identical. I hope that's making sense. But the long and short of it is APRs are due within 90 days at the end of the operating year. Use HMIS data. Use accurate HMIS data. This is important to both you're being evaluated HUD and you're being evaluated by your CoC. Okay, I may have already said that many of the factors used for project ranking are taken from the importance of timely and accurate APR reporting is many of the factors used for project ranking are taken from APR. HUD will close, oh, this is a big one. HUD will close you out of ELOCs if your APR is late. I don't know how late it can be and still keep you in ELOCs, but I do get calls from fiscal people saying, HUD won't let me have my money. I said, go back to your program person and see where the APR is. HUD and CoCs regard timely APR submission as a measure of project capacity and performance. So if any of you wrote the renewal application last year, they said, were any of your APRs later than 90 days. They are looking at it. And now the COCs are also looking at it as probably a ranking criteria. Are your APRs on time? So we think that in the future that late APRs by grantees could impact the score of the CoC. And that would in turn impact our ability to get new money. We don't know this. This is just my kind of looking down the tunnel of how HUD does things. They hint at something one year and they whack you with it the next. So please, APRs need to be on time for your purposes and for everybody's purposes. It's a performance issue and it's a fiscal issue for you guys. Okay, under the interim rule, HUD requires grantees to make drawdowns from locks at least once per quarter. Now, I know of agencies that don't do that. But then when I talk to other agencies, they say, well, how can they survive if they don't draw their money down at least once a quarter? We draw down every month. But there's sometimes a disconnect between the fiscal office and the program office. And these may not be big grants in the fiscal office's eyes, so they may not draw down as frequently as they might. Drawdowns must be at least quarterly. And same logic as with the timely filing of APRs. These are required this is looked at as a measure of project capacity and performance. HUD asked about it on the 2015 application. They may get mean about it in the next application. We don't know. This is another very important one. Grantees are expected to fully expend their grant. Each year HUD is sort of trimming and trimming and trimming the amount of money that's available. And they're very pained by money. Well, I don't know if they claim to be pained by money sent back to them. In fact, the money that does not get expended on grants is what they use to meet a lot of their grants that go above the actual allocation for that year. So they recapture money and then give it back out again. But we don't want our money recaptured and sent off to California. We want our money here. We want it spent here. So also the expenditures need to be accurately reported on the APR. Now, again, every agency does their APR differently. The program person does the program stuff off of HMIS, and then they ship it off to fiscal, and fiscal fills in the expenditure part. Everyone needs to be aware that the expenditure part is as important as the program part. It needs to show, we've looked at APRs and said, well, you only spent 2/3 of your money. No, we spent it all. I said, well, look at your APR. It doesn't show that. The APR needs to show actual expenditures and actual match. It needs to match reality. HUD and COCs, like I said, regard full expenditures and measure of project capacity and performance. And the same as before, in the 2015 application, they ask whether any of your funds are recaptured. And the COCs look at recapture by HUD and the renewal, ranking, and reallocation processes. It is very important that you expend your money, but expend it properly. Don't just spend it because it's coming up at the end of the year. We got to quit, dump our money on the streets. You need to keep your programs at full capacity, keep your staffing at full capacity, and meet your obligations under the grant. Okay. This is one that we don't know, we don't have some, well, Lee may have some good ideas for you, but we're going to talk, one of the pieces of HARF, and it was actually goes all the way back to McKinney, and it has never really been talked about much. I don't know if anyone has been hit with this on their monitoring, but we wanted to bring it to your attention and make it more of a focus of what you're doing, and that's participation by homeless and formerly homeless individuals. So in the interim rule it says, each recipient and subrecipient must provide for the participation of not less than one homeless individual or formerly homeless individual on the board of directors or other equivalent policy-making entity. To the extent that such entity considers and makes policies and decisions regarding any project, supportive services, or assistance provided under this part. So if your board makes decisions about this grant, that's what they're talking about. This requirement is waived if a recipient or subrecipient is unable to meet such requirement and obtains HUD approval for a plan to otherwise consult with homeless or formerly homeless persons when considering and making policies and decisions. So I'm not sure the extent to which the grantees on this line have homeless or formerly homeless participation on their boards or have requested this waiver, but it's part of the interim rule, and it could come up in a HUD audit. The other part is participation is each recipient and subrecipient of assistance under this part must, to the maximum extent practicable, involve homeless individuals and families through employment, volunteer services, or otherwise in constructing, rehabilitating, maintaining, and operating the project, and in providing supportive services for the project. So they're looking for programs to utilize the services of homeless, formerly homeless people, either as volunteers or as employees in their projects. This one I have a little bit of thoughts about how to handle it, not a lot, but I recently saw a CoC suggest that every agency put some sort of a notice on their bulletin board saying, we are operating the following programs. If anyone is homeless or formerly homeless and would like to seek employment or volunteer in this program, please let us know. Sort of a way to publicize the availability of this as an opportunity for homeless or formerly homeless. Lee, did you want to add to that or no? No. It's something I think we need to learn more about, maybe find out from some national technical assistance how this is being handled, but it's something that we have not emphasized in the past, and we just wanted to bring it to your attention. So, do we have any questions on these last parts of the presentation? Dave?
Yeah, Barb. The one question around the APR, is there still a hold on submitting APRs pending further guidance from HUD, according to the
goodness.
email?
Good question. I don't know. I think that was a programming glitch. I don't remember what that, thank you for reminding me. I saw that email. I don't think so. I would, if you have an APR due, I would get into eSnaps and start working on it.
I'm currently working on the HMIS APR, and it has not been created in eSnaps yet, so I'm still waiting.
We think this hold may be on there. Wow, okay.
The email that went out did say that folks who had an APR deadline that was impacted by the hold would be granted an extension. But like Barbara, I don't remember the details of the timeline related to what was going on with eSnaps and when they would be available to be entered.
That was months ago that email came.
I don't think that long ago.
It was a while
March
ago.
21st.
All right, that's
about
a month ago. I thought it seemed longer ago than that. So
yeah,
they have not fixed that yet in your experience, Dave.
Correct.
Thank you. Okay. I'm just going to ask a question out there if anyone could quick answer it. Has anyone been able to submit an APR within the last month? Just type in, yeah, I have, or no. If anyone has, just type in, yes, I have, so we can see if they're actually, if it's just that some are not opened and some are. I'm glad someone raised that. And if we see that HUD Exchange sends any kind of an alert that it's back open again, we will let everyone know. We will forward that to the entire distribution.
We got 2 responses.
Okay, and they said?
Yes.
2 people have been able to. So, Dave, I suggest you go back in and take a peek.
Yeah,
you had indicated that sometimes it appears and sometimes it doesn't.
Okay, let me ask you a different question. Again, because we're not grantees, we're not privy to the details of this, but I've done them for clients, and sometimes we've had to go set them up. Sometimes it appears on the project list. So those of you who have submitted in the last month, could someone just say whether it appeared miraculously on their list or whether they had to do the setup? And then while we're waiting for that, Dave, are there any other questions?
Yes.
Okay.
It's a pretty lengthy one.
Right.
Real fast, quick response on that one with the APR. It appeared on the project list.
It appeared on the list. So anyway, everyone just keep looking at your project list. And I would say when it's time for your APR, check your project list. And if it's not there, contact your rep. I would work on the assumption that fix has been made and that APRs are now functional again. But that's, we don't know for sure. But that's sort of how. And if it's not there, you contact your rep and they'll tell you, oh, eSnaps is broken or it's fixed.
Okay. So it looks like this is one of the last questions
we only have a couple more minutes. Yeah.
So it says, since we are part of a large corporation, it may not be possible to have a homeless or formerly homeless person on the board. However, the program developed years ago a participant advisory committee that allows program participants to give feedback regarding program issues, policies, etc. Does this meet the requirement?
I think that to answer the question, the answer is yes. The purpose of it is a policy-making entity that impacts the program's policies, right? So it says to the extent that the entity considers and makes policies and decisions regarding any project, supportive service, assistance provided under this part. So the reality is that if the policy-making committee or participant board that was just mentioned is in fact meeting that threshold, which it sounds like it is, that it would have input regarding the policies, it should be fine. It may not hurt, by the way, just to submit that officially through the channels to get the waiver. I don't think that it will be a problem, but I think that we've heard enough folks over the years say, I thought I met a particular requirement, but my rep, dinged me for this or that during a monitoring, and so it wouldn't hurt to just sort of dot that I and cross that T, but I don't think it will be a problem getting the approval.
Thanks. Anything else on there, Dave?
Yeah, there's actually a couple.
Dave, does this shut down at 3 o'clock?
No, it can continue to go.
All right, we don't want to take up too much more of anyone's time, but if there's a couple more questions, we want to make sure we get them answered.
Okay. How do we get the waiver? Is there a specific form?
That's a good question. I don't know the answer, but I was just writing myself a note to find that out as well. So as soon as I have that, it seems like we've got enough outstanding questions that we will probably send out some sort of fact sheet or email sort of outlining all of these questions with responses from HUD as we receive them. It probably will not be at one time, so we may just sort of shoot them out one question at a time as we hear back from HUD, because sometimes they take a considerable amount of time if they don't have an answer for a question. But point is, we'll get that out. But I'll look into the waiver before I submit it.
Is there another one on there, Dave?
We have the last email about the HUD APR I have was that HUD is granting via the email an extension to the APR submission to all subrecipients for APRs for CoC program grants funded in FY14. HUD will issue issue a listserv when the APRs become available. And he snaps.
Okay, so we have not heard. I think we should just check with AAQ about the status of that.
We'll follow up too.
Yeah.
Okay.
That's terrible.
Okay. Anything else?
Are there anything else on there, Dave?
One person responded to the waiver question. It is my understanding that the agency needs to write a letter giving the specific circumstances they are requesting a waiver. It is then submitted to the HUD rep or their HUD rep.
That sounds right. We will confirm that, but that's usually how these things happen. And if it requires Washington, they send it to the desk officer in Washington and then get it back to you.
And that is it. If any other ones come in, I'll make sure to put them on this document.
Okay,
great. Thank you.
Do you want to add something?
Yes.
Lee wants to add something.
The other thing I just wanted to quickly add to folks is I know for many of you, some of the material today was a repeat of things that you already knew, but I also know from the last 2015 renewal projects and new project applications that were being submitted that there was a lot of confusion about match and leveraging. So please make sure that you, understand the information that was presented today. If there's any additional clarification that's needed, please let us know. And the other thing I just want to sort of remind folks of is how important that documentation is. At a recent meeting, I guess a few months ago now, one of the HUD monitors was speaking at this meeting and indicated that lack of documentation for match is one of the most common findings behind insufficient documentation of program expenses and of the homeless documentation record-keeping requirements. So he considered this in his top 5 list of common monitoring findings. So if you have monitoring commitments that are needed, that you've made, if you have match commitments that you've made through your application, please make sure that you're documenting that properly. Lastly, I just want to say that I'm going to make sure that there's a question on the follow-up survey that basically follows up on some of these things to find out if folks need help or a template in terms of working with their behavioral health providers to get that documentation requirements, and if so, like I said, we can follow up with either some sample tools or some kind of peer sharing call.
Okay. Thanks, Lee. So I think Lee pretty much covered what this next slide says. If you'd like to suggest future topics for webinars, let us know. You'll receive a survey shortly after the webinar, and it'll probably have that question on it, or you always can write to PACOC. And next webinar is Tuesday, May 17th, and it'll be discussion of low barriers, policies, and implementation, which is something that we get tons of questions about, and it's one of the tough ones, again, because it's new and it's a different approach to doing business for many of us. So that is it. Thank you all very much. Again, feel free to check in with us with other questions. We're doing our best to respond to what we can. Sometimes if we don't respond, it's because HUD hasn't responded to us, but we'll do our best. Anyway, we're glad that you had a lot of questions today. That made it more interesting for everyone, so thank you. And we'll talk to you in a month. Okay, bye-bye.